Hey everyone, it's Nick with Us versus Herd. Today I'm going to be covering some safe ways to trade options on Robinhood. So if you're trading options on Robinhood, this video is for you. There are quite a few pitfalls right now when trading options on Robinhood, and I think that Robinhood is starting to acknowledge those due to how many people misuse their platform when the whole GameStop AMC thing happened, and they're trying to educate their users. What I've been saying for years is Robinhood hasn't done the best job educating the users, one, on options, and two, on their platform and knowing what the risks are. A lot of people that come into options trading were already trading stocks or penny stocks on Robinhood, and then Robinhood one day said, "Hey, you're eligible for trading options. Let's give it a try." And then you tried it, and it was like, you're like, "Oh, I'm hooked. I need to get on this call put." But most people, when they started out, they're like, "I don't even know what this is. I just buy it, goes up or down in value. I'm not really sure." So I want to cover some safe ways to trade options on Robinhood. I'll be going over my Robinhood account here, and I don't actively trade on Robinhood because I don't believe, for me, as someone who trades as high a volume as I do, that Robinhood is the best platform, especially for day traders. So what the first thing that I want to talk about is the execution time. The execution time on Robinhood is extremely slow when it comes to day trading. So one of the pitfalls that I would definitely not fall into is day trading on Robinhood. And people are like, "Well, I just put through a market order and everything's fine." Like, you should never put a market order in on any platform when trading options, because then you're dictating the market. You're letting the market say, "Hey, just fill it whatever price you want to fill it." And sometimes you might get a great fill. Sometimes you may get a poor fill. More times than not, you're not going to get such a great fill. Okay. And for the people who are like, "Oh, you don't know what you're talking about. Robinhood is really great for day trading." I highly encourage you. I've used every platform that's out there. Check out what else is available. Use them for 3 to 6 months, and then start commenting on if Robinhood is great for day trading. But day trading on Robinhood is a nightmare, because let's say you put an order in, you then have to cancel it, then it gets replaced, and then you can put on a new order. Other platforms do it automatically. Cancel and replace is one click on a lot of other platforms like Tastyworks, right? So cancel, replace, you're back in. On Robinhood, if you don't get a fill, you got to cancel, then go to replace, and then you get a fill, right? Or if you don't, you have to keep doing it until you get a fill. And sometimes, I've had issues getting fills on Robinhood, or having issues getting the order was getting canceled on Robinhood, right? So the order wouldn't actually cancel, and Robinhood's like, "Oh, we're canceling the order," and just like stuck in canceling, and then you can't do anything, right? Unless you want to place another order, but then you're afraid, does that order really get canceled, or is it going to fill? Am I going to get double filled? Like, so you get what I'm saying. So for me, one of the best things that I think that Robinhood does, I think it does give people exposure to the markets. It does allow you to quickly, on a pretty clean interface, look at options in particular, kind of like looking at SPY. Now, this is the same look and feel on mobile as it is on web. They have kind of a unified approach, which is nice. So if you're on mobile, looks the same thing as on a web. Now, I highly recommend that, when you're trading options on Robinhood, you're primarily swing trading. What does that mean? Swing trading means you're buying something today and selling it tomorrow, or the following day, or the following week, or the following month. So kind of taking the slow approach. The quick approach, like I said, to day trading, if you're trying to get in, out, in and out, in and out, Robinhood is not it. You can't program any hotkeys like you can on other platforms like Thinkorswim, or Tastyworks. You can't, or DOS Trader even. You can have, like, if you're aggressively day trading, you're going to want to be quick, and Robinhood is not it. So I highly recommend, rule number one, primarily using it for swing trading or long-term investing. So if you're buying calls or puts way out there, that's fine, like a month out, 2 weeks out, or even leaps, a year out, 6 months, or 6 months out plus. That is good. Also, another pitfall is people are buying low volume strikes, and they're like, what does that mean? How do I know what's low volume, what's high volume? So look at SPY, right? SPY, very active. Everybody knows what it is, S&P 500. And you can click on any strike here. we'll click on a couple strikes here, and you look at this is today's volume. So volume resets every single day. This is today's volume. So for the 411 strike put or call, it's got 4,000 volume, and I think anything over 500 volume or even 1,000 volume is great. So this has 4,800. This has 15,000, and this is obviously expiring today. Even if you go out, let's say April 14th, we'll go to April 14th. Look at the 411 again. Now you can see here, April 14th only has 112, only has 112 volume. Like, oh, that's not very good. But the other thing that you look at here, bid ask. The bid ask is only a couple pennies. So this is $1.30 for the bid, $1.32 for the ask. And why do you want that bid ask to be tight? And the reason why is so that way you can get in and get out and have it not cost you a lot of money. So if you get in this trade, let's say you hit the ask to get in, you hit the ask, you get in, it costs $1.32, and like, oh, I made a mistake. You want to get out, it's only going to cost you $2 to get out. $1.31, right? Now let's go to something that is a little bit lower volume, right? Let's go to actually look at DKNG. DKNG, sometimes you get into a situation where the strikes aren't that liquid. Let's go like May 7th in this one. Let's check the 65. Okay, so this is a good example for something that is low volume. So I'm in DKNG May 7th calls here, buying the calls. Volume only 110, so not very good. And the bid ask, look, the bid is 296, 297. The ask is 335. So that's 40 cents. So if you hopped in the trade and hopped out, the spread potentially could cost you 40 cents or $40. So again, one of the things on Robinhood, if you're trading, make sure you're trading liquid or high volume or higher volume options. And if it's not, like we saw on SPY, if you're trading SPY and the volume is low, look at that bid ask spread, because one thing you don't want is like the bid and the ask to evaporate and you're like, you paid $3.35 and the ask is $2. Like we see this all the time on Robinhood, on any platform, really. You want to be very safe, but on Robinhood, look for higher volume, look for a tighter bid ask spread on the options. Like looking at Apple, highly liquid. Just gonna give you a little comparison here. Let's look at this. Look at this $1.30 here. Okay, $1.30, 130 strike call, bid 17 cents, ask 18 cents, volume through the roof, 83,000 volume today. That's today by itself, right? Now let's skip ahead. We'll check the 130. Let's check May 7th here. We'll check the 130 again. 1,800 volume, great. Bid ask 272 as the bid, ask 277. So you're getting about like 4 to 5 cents. 4 to 5 cents is like kind of my limit there. So like once you get to like 10 cents, you kind of ask yourself, if the bid ask is 10 cents wide, you have to ask yourself, is this something worth getting into? Is it something that you're going to hold for a long period of time? And if you're day trading, you want that bid ask to be tight. Because if you're day trading, you want to get in, you want to get out. You might be in that trade for a minute, 10 minutes, 30 seconds, and then you don't have that much time that goes by. So that's why you always want to have a tight bid ask spread here. Just concentrate on the volume, concentrate on the bid ask, and you're going to be able to, get in and get out and not have it cost you a lot of money. Just those couple tips are going to save you a ton of money. Going into even like Disney, some big names. Let's go to May 7th on Disney. Check it out. Let's check out May 7th. Let's check out these 200s here. So this volume, you're looking at here, you're looking at the 200, May 7th, 200 strike calls. Volume is 672. Bid ask though, 12 cents. So not terrible, but you want to ask yourself, do you really want to be in this trade if it has a 12-cent bid ask spread? Like I said, the tighter, the better. And the volume, it's under 1,000. It's over 500, so it's not terrible, but I wouldn't say it's great. You kind of want to click through this. That's the other thing. Robinhood doesn't give you a whole lot of information from the one glance. It'd be nice if they had like a table view where you can view all this information like you can on most platforms, but here they only give you 5 columns here, obviously. Okay, not great here. Bid ask $195, ask 380, bid 260, and volume is only 35. So there's probably not a trade that you want to get into. Okay, so I think that you kind of understand the bid ask. That is some pitfalls. You want a tight bid ask, and you want volume on the strike that you're trading. Now, the strategies that you can employ that would actually help you and not hurt you as much over time and making sure that you're trading safe. I highly recommend, if you're new to trading, focus on spreads, whether it's a credit spread or debit spread, and educate. I'm not going to go into this right now, but if you're getting value out of this video so far, hit the like button below. Definitely appreciate it. Hit it for the YouTube algo. But the things that I would look for in terms of the safest strategies for new traders, definitely credit spreads. And the reason why is because you want that strike to be out of the money. Well, a lot of people lose money. A lot of people lose money on Robinhood or any platform, especially when you're new, is because they are losing money to theta decay. Now, if you're selling a credit or you have a credit spread, it means that you're going to be making money as your options lose value. So I definitely encourage you, and it's a little bit complex of a strategy for people to understand, because you want the actual investment to go down versus going up for you to collect the profit. And I have Robinhood videos about this as well, on how to put on a credit put spread, how to put on a credit call spread. So focus on credit put spreads, credit call spreads. That's for if you want to short the market, credit put spreads if you want to be long the market. And then, debit spreads are safer. That way you can buy and hold them, and theta will kind of offset by your short option as well. So debit is if you want to be long the option. So debit call spread would mean you're long the market. Debit put spread would mean you're short the market, right? So those were the things that I would employ. I would look at those strategies. I'm not going to go through it because it would be a very long video. I do have videos on each of those strategies on YouTube as well, if you want to look at how to actually execute one of those orders. Now, the other thing is buying options. If you're buying options a lot, which most people are, if you're buying calls or puts, make sure you're buying it. Let's go back to SPY. Let's do Apple actually. Make sure you're buying it. Something's not expiring this week or next week. You want to have time, right? Because you're going to be focusing more. Safest way to trade options here, if you're buying options, swing trade something 4 to 8 weeks out or longer if you can, right? And what you're going to be looking for, let's say I'm going to be looking at May 21st, okay? What I'm going to be looking at here, let's say I'm looking at this 145 call here. I'm going to be looking at how much delta it's going to get me, what the volume is. So on this particular strike, right, it's going to be 11 delta. And you're like, hey, what does that mean? What does the delta mean? It means for every dollar, that's how much the option is going to go up in value. So if Apple goes up $1 from, right now it's trading at 125.77. If it goes to 126.77, I'm going to make $11 or 11 cents, right? So you add the 11 here to the 79, this will be worth 90 cents. So that's where people don't understand, is like how to calculate your delta and how much it's going to be worth, right? So look at your delta, it's 11. If it moves up $1, it's going to go from 80 cents to 91 cents if it moves up $1. And you have to see if that's worth it to you. I mean, I particularly like to go higher delta. I like to go somewhere like, 40, 50 delta, buying in the money, but definitely can be pretty profitable if you're buying out the money. Now, one thing you don't want to do is buy like the 225 calls for three delta here, and or the 220s for 5 delta. And that means for every dollar that you put in, I mean, sure, you'll make 100% investment, right? So if it goes up $1, you could buy 100 of these, but you have to be very, 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 very careful, right? When you're buying this far of the money, theta decay is going to start to hit. As you can see, look at your delta, and then look at your theta. If it goes up $1, you're going to make roughly 3 cents. But theta is also taking out 3 cents a day too, which is going to offset. So so that's why it's kind of like a losing game. That's why you want to have a higher delta. Let's go back down to like the 140. As you can see here, this is going to be 0.039. So this is going to be 3 cents, and this is going to be 18. So this delta is going to be higher than the theta in this case, versus down in here, delta and theta are basically the same. So you don't want that to, you don't want theta to take away your gains from delta. Okay. So that's one thing that I focus on when buying options, just making sure delta and theta is checking out, it's worth the risk to reward. And if you're trading on Robinhood, making sure it's something that you can hold for a few weeks even, because you don't know if their platform is going to go down. You don't know what's going to happen tomorrow. And if you buy something, let's say expires today, like if you're buying SPY, which they do allow you to trade same day expiration now. So as you can see here, this one's saying expires today. If you're trading same day expiration, you have to be very careful. I mean, we're coming into close here. I mean, close is in 6 minutes and you could buy this, but very, very high risk. You might not be able to get out. Like I said, like if you can't cancel your order, you're going to be in trouble. And the other thing is, if you do get in trouble, let's say you get assigned options, Robinhood doesn't have the best support. So that's why I'm saying on Robinhood specifically, a safe way, trade the long game. Don't try to get that quick money. Trade the long game, trade slow. And if you do get in trouble and you need to contact their support, you can't like call them up. Other brokers, TD Ameritrade, Tastyworks, Schwab, all those ones, you could just call up on the phone because you pay commissions. You call up on the phone, you say, hey, I'm having some trouble with this account, or my account, I'm having some trouble with this contract, blah, blah, blah. I got to sign, I don't understand. If you don't understand, you can lean on them and they will help you through. And that's what you pay commissions for. Robinhood doesn't have that. You email somebody and they're just like, oh yeah, please wait, please hold. We'll let you know. We'll get back to you in a couple of days, kind of casual. But this is your money. You don't want to be casual about your money. If you have a 6-figure account in Robinhood, you could put that somewhere else and get better support. That's all I'm saying. So the safest way to trade options are the ways that I recommended. Definitely swing trade. Look for credit put spreads, credit call spreads, debit spreads as well, and just play the long game. Focus on the bid ask. Look at what the volume's at, and just take it low and slow. The money will come in low and slow, and that's how we make money. So if you watch this video to the end, comment, watch to the end, and as always, stay safe, stay green. It's us versus herd.